Hello, everyone. Welcome to our K-1 pass-through series. My name is Dave Stoffaker, the Senior Credit Trainer at Lenders Online Training, where we help lending and credit professionals say yes to good loans. Joining me is Linda Keith. She's our company's founder and our Chief Credit Training. Linda, thank you for joining us today.
Happy to be here.
In our series, we have about 30, 40 questions that focus on the pass-through and K-1 series. Our question today is, what pass-through items or where do pass-through items end up on the personal 1040 tax return? As many of us know, the analyzing a pass-through entity like a S corporation or a partnership return, several items flow through from a K-1 that goes to the owner's tax return. But where do we find these items and what do they represent as income or cash flow? It all starts with the Schedule E, page 2. That begins basically where we're actually showing the percentage of ownership of taxable income that actually flows from the entity based on their percentage of ownership. That doesn't necessarily mean it's cash flow, it's taxable income. Also, we show up as guaranteed payments will also show up in that figure. But at the end of the day, the key thing is those figures mean nothing to us when it comes to cash flow analysis. Linda, what other items show up on the tax return?
Well, you know, the Schedule E is the place we most often see it. And as you pointed out, guaranteed payments could be there, but they're totally buried. So there's nothing on that 1040 Schedule E that we actually can use except, oh, here's a list of partnerships or S Corps or LLCs I need to do something with. But you're right, that's not the only place that it can show up on a 1040. So there is the share of operating income and so forth on the back of E. But when we get to Schedule B, if the pass-through entity had interest income, my share, if I'm the owner, will show up on my Schedule B. But you know, in the module on Schedule B in our Lenders Online Training, we point out that you cannot use K-1 pass-through on the Schedule B. It's not real money to that person. It happened at the pass-through entity. Likewise, capital gains, Schedule D, could be a portion of capital gains that came from the S Corp or the 1065 filing entity. Now, the reason that happens is that we actually have to pay self-employment tax on our share of ordinary income if it comes in on the back of E and we are actively involved in the business. We don't pay self-employment tax on interest income. We don't pay self-employment tax on capital gains. And in fact, capital gains has their own limitation. So if you've wondered why the heck it's coming so many places into that 1040 from the K-1, why do the K-1s have so many lines? It's because the preparer of the next entity, 1040, or the owner could be a S Corp or LLC or corporate entity, but that preparer needs information to complete that one correctly. And in another video, we cover that K-1 and how do you tell what numbers to use from it. But the key is everything in the 1040 that is passed through is non-cash. They tell us there is another entity to pay attention to, tells us we need to get a K-1, but we do not use those pass-through numbers that land in the 1040. David?
There you have it. Where do pass-through items show up on your 1040 and what do we do about it? In our K-1 pass-through series, we will continue our conversations that focus on many items that create some confusing encounters when we're underwriting our business loans. As a final reminder, we always love your comments, your questions, and feel free to contact us at lendersonline.com. That's lendersonline.com. Thanks for coming. Until next time, have a great day.